was tripping. Holy shit. Yeah, I'm so sorry. Like my chat is delayed, so alright. Yeah, rookie streamer. Sorry guys, sorry. Alright, so yeah, I was talking about, do you guys like when the cam is a rectangle like this, or you guys prefer like the first stream when it was a circle? I need to know that. If you guys can tell me which one you prefer, that would be good, because that's still a debate for me, you know. Doing great. What about you? Alright, so yeah, the first trade you could have caught today was on the gap fill. So right here, as you guys can see, we gapped up from yesterday's close, which means that yesterday we closed here, today we opened right there, so it left a gap, and at 9:30 we pushed up without tapping this area. Alright, so if you find weakness at the highs and confirmations that sellers are aggressive and that buyers are getting squeezed, this is a good area to go short. So right here, let's see the play you could have caught. It was not an inversion play like I usually look for, but right here it was, you know, a market structure shift right here. So we had the breaker pattern, the high, low, higher high, and lower low right here, so which formed a failed order block. And as soon as you see this failed order block, this turns into a breaker. This is where you want to go short to target the opening range gap. So this was, you know, a 2022 model right here to short towards the opening range gap here. So it's either you enter aggressively at the close, or you want to wait for the pullback and then you short here. Right, so hit the sale and then boom, you're out. Okay, so that was, you know, a trade you could have caught. Then for the rest of the day, there was not really any trades for me and the way that I read the chart. So let's see if we can take a trade together. Square, rectangle for me. Yeah. I think with the rectangle, you guys can see, you know, the background a little bit better. You know, it's a little bit wider, of course. But yeah. I'm not gonna respond to that. Best time to trade 15 minutes for value gaps. It would be, so best time to trade IFVGs would be during the macros. So 2 seconds. It would be during the macros, which is the first, so first 10 minutes of every hour. That would be it. Yeah, during the macro is the best. Or, you know, IFVGs are pretty strong in the beginning of the day, so like 9:30 to around 10:15 a.m. I don't know how I can put my chat here. I'm not gonna touch anything here. So right now, we're not in any fair value gaps still. Fair value gaps on the 15 is right here. So this could be, you know, a scenario where we would want these lows first before drawing back towards the internal gap. So from external to internal, or even, you know, displacing aggressively here, forming a gap, then trying to target it, depending. Could you turn off the background music? Yo, that is a crazy statement. Yo, who wants the live stream without the music in the background? If nobody wants it, then I just cut it out, to be honest. I think it's pretty nice if, let's say you're trading and you just want to hear something in the background, you know, talk with someone. That's what I thought. But you know, you can never satisfy everyone. Yeah, I can lower it for sure. Right here. Alright, if it's a little too high, I put it down a little bit. Is my mic good? Or, yeah, sorry. Is my mic good, or my voice sounds a little bit too rough? Because I cannot, you know, it's hard to figure out exactly what the best settings are. Music is good. That's perfect then. Alright. Mic perfect. That's good. K needs a break. I think K, I think he's good now. With the volume reduced, he's gonna like it. So right here, still no trades for me, so 17 minutes left for the hourly candle close. We'll see what it does here. But if we have a market structure shift right here, basically this fair value gap is going to be the drawn liquidity. So I will want to target that right here. So always looking to target unfilled gaps. Turn up the volume on the actual speaking. My voice is low. I just don't speak. I think I just gotta raise my voice. That's it. Hi Jacob, how are you doing? I don't know how to do polls. I need to know how to do polls. We don't hear the music. How is that? Yeah, I think my mic was a little bit far from me. Damn, you hit your daily loss limit. Man, it's all good. I think, Jacob, right now you're at a point where you know what you're doing, you know you have a strategy, and it's going pretty well, which is good. The thing you need to focus on, in my opinion, is finding out when the market will give you lower probability trades and just lower the risk on them and take less trades in certain days. That's it. Man, you'll learn from these days. It's all good. those mistakes, you need to make them in order to grow, even if it will suck at the moment that you take that loser, but it's totally needed. Like you need those losers, those big losers, and those daily loss limits to improve. You know, you know what you're doing, because you can't in trading. You can't. There's no really luck. There's not a lot of luck if you are consistent. If it's been 2-3 months in a row that you see your trades hitting or take profit, and you're doing something right. You have to acknowledge that. So now just build up on that. 1% better every single day. Journaling, backtesting, refining, and understanding where you went wrong, and that's it. And what do your usual trading hours look like? My trading hours, to be completely honest, I look at the chart during the whole day, usually, but I look at the chart more during the macros, because this is when volatility starts to pick up. So I would say I trade the whole AM session, and as soon as I take one trade, I'm usually out of the market, and my frequency of trades is pretty low. I have around from 10 to 12, 13 trades max during a month, because I focus on stuff that are repeatable in the long run, and that have true edge no matter the market conditions. That's really it. So I trade with a mindset of, trading with a live account that has $1 million in it, rather than just trading, trying to make the most amount of money on prop firms. Building the skill every single day, because if you just focus on getting payouts as fast as possible, then the amount of bad habits you will build is going to be insane, and it will be really hard to get that out of your system if you truly want to become a full-time trader. Do you recommend having 5 Tradeify 150k straight to sim? Can anyone use code Amos? Yeah. So really, I'm gonna make a video on that. I've already made the video basically on that, which is going to explain every single plan that Tradeify offers. What is the best plan in my opinion, what kind of accounts you guys should focus on a little bit more than the others. So for me, I had a perception of the market that evaluations, even if Tradeify evaluations are really good, the rules are good, but for me, I really like the concept of straight to sim funded accounts, because I think evaluations are made for, are a little bit harder for traders, because you don't see profits immediately from all your hard work. Okay, so what you're gonna do is, if you buy an account and let's say it's a little bit cheap for you, it's let's say $50, and $50 is not a lot of money for you, let's say because you live in the US or Canada, then you're not going to be too attached to that evaluation, so you will start taking trades that are not following your strategy or your risk parameters. So you will build bad habits during that evaluation stage, which is why I like straight to sim funded accounts so much, because you can immediately start making money as soon as you pay the activation fee. So what's up, Umar? Oh my god. What's up, Umar? How are you doing? This weekend we're backtesting with Tradezilla, guys. Backtesting with Tradezilla this weekend, 100%. Hey Umar, please go check your DMs. I have something I think is gonna be pretty interesting for us. How you guys doing? But yeah, so basically what I like about Tradeify straight to sim funded accounts is the fact that you don't have to pass an eval, so you don't build bad habits trying to enter with max size on a trade that is not following your strategy or following your rules. So it replicates a live environment pretty accurately, and the amount of drawdown that you get from that initial investment is 10x more. Let's say you buy 150k straight to sim, it costs you 580 bucks with code Amos. Okay, 35% off. Even 550 right now, and you have access to $6,000 of drawdown, which is incredible. It's 10x the amount of drawdown that you would have had if you put $600 in a live account, you know. Let's chat this weekend. Keep crushing. Thank you, Umar. What's up, Cal? Yo, Cal, are you still trading on the lower time frames? I remember seeing you. I think you were trading. I think you were trading like DTFX or something, or didn't you? I remember your name from Twitter. But if you don't have the skill to pass the evaluation, why invest in straight to sim funded accounts? If this makes sense. This is a really good statement. You need, in my opinion, to backtest before. And backtest, when I'm talking about backtesting, I'm not talking about, you know, taking 100 trades and thinking that you have an edge in the market. I'm talking about, you know, real backtesting, which is thousands of backtested trades, journaling all your pictures, understanding why you lost on this approach, what is the framework that you can utilize in order to have a better win rate, etc., etc. Keep improving on it. And as soon as you have a lot of data and you have a backup, you know that what you're trading is real and has true edge. As soon as you have that, then you can start investing to see a return on investment, basically. But you do not want to buy a straight to sim funded account if you're a new trader, or you think, let's say, I'm gonna buy here in the morning. You don't have a plan. I saw too many people on the last live stream that was like, hey, Amos, can you do the giveaway right now? I want to take a trade during PM session. And that's unfortunate to hear those kind of words, because this is not the way to trade. This is not the right way to trade, in my opinion. You should have a plan, and this is a real job. Trading is hard, if you're not if you're not taking it seriously and you're not all in on trading and you don't know exactly what you're doing, you're most likely not gonna make it. Just being completely honest. So just focus on the skill first, then invest, which is absolutely something that people are not focused on. Most of the time, people are just focused on trying to get, make money from trading, when in reality, you don't really, yes, you learn from live markets, but the lessons you learn in live markets hurt. You could learn so much in backtesting without being hurt. And sometimes, being hurt in the live markets will traumatize you to a point where you will be, stuck. So don't put yourself in that situation. Put yourself in a situation where you focus on the skill, backtest every single day. You journal. That's why it's so important. Everyone keeps saying the same thing, but this is so true. Like if you try to skip steps and you try to cut the corners, you will not make it. And it's not really about making it. Like in trading, you never truly make it. Like every profitable traders know that. There's not a point in trading where you're like, yes, I made it right now. Like it's finished. Like I don't have to do anything. I just have to take the setup like this for the rest of my life. No, yes, but no also, because you have to adapt to the market conditions. You have to keep doing what puts you in the position that you are right now. Let's say if it was journaling, backtesting, keep refining your edge. The people that are going to be students forever are going to be the best. How do you approach news days? News days are just days where there's more volatility in the market. I avoid, the first 30 to 45 minutes when the news drop, and then I see if there was any distribution where I know where are my buyers or are my sellers, and then I engage in the market to see if there's any opportunity to see either a reversal play or a continuation play. Yeah, not anymore. Haha, M1 or higher now. Was good to learn though. Yeah, if you didn't find your way there, then it's all good. If you tried, and you definitely learned stuff that are gonna be super valuable for your next approach. You know, that's the best thing. Even for me, like, I tried everything at first, but everything that I ever learned is still super important to this day. The amount of concepts, let's say even order flow concepts, even if I don't use order flow anymore, what I learned, the framework that I learned behind order flow just changed my perception on trading. I just view the market as buying and selling pressure, but use ICT in order to frame my trades. Amos, do you think one-to-one is the best risk to reward? It is definitely the best risk to reward in when you're using prop firms, in my opinion. Why? I'm gonna explain quickly. Is because a concept called the risk of ruin. The risk of ruin is, let's say you have a strategy that has a 50% win rate, right? If your strategy has a 50% win rate, then you have around 97% chance, I think, of seeing a 6 trade loss streak in the random distribution of trades that you're going to be taking. Okay, wins and losses are totally randomly distributed. Even if you have an 80% win rate, you could lose multiple times in a row. That's what risk of ruin means. Okay, so if you have a 50% win rate and a 1-2, do you really want to face the fact that you could lose 6 trades in a row with a prop firm account? Okay, so the lower your win rate, the more trades you can lose in a row, which is the risk of ruin. So this is why you need to have a higher win rate, in my opinion, to have this lower risk of ruin. Okay, so basically, why do you need a low risk of ruin is because you have low drawdown. Since we are in accounts that, let's say we have $2,000 of drawdown and we need to make $2,000 of profits to request a payout, it means that if you want to take the payout after, let's say, 1-2 months, then you would need to risk at least $200 per trade, right? Let's be honest. And $200 per trade is 10% of the account. But if you have a low win rate, then you will just keep adding those losses back to back, which is going to kill the account. But when you have a high win rate, the chances of you seeing a loss streak is so much lower, which is going to almost guarantee you that you will not blow the account. So that's pretty much it, if it makes sense. But the fact, like, let's say you were trading a live account, that wouldn't be too big of a problem to trade a high RR strategy, and a low win rate strategy. But since you have super tight drawdown, then you need to focus on risk of ruin. Turn volume up. Is it good right now? Is it good, guys? My I think my mic is I have to talk close to the mic, I think, like this, or like this. But yeah. Good, perfect, thank you. Let me read the comments. These are good comments, I like it. Honestly, backtesting is the reason I was able to improve my risk management. Thankful for it. Let me give you my view on backtesting. Basically, it's all about, it all comes down to one concept. The concept being that all your winners and losers, no matter your strategy, it will be randomly distributed. If your winners and losses are randomly distributed, it means that you could face win streaks, you could face loss streaks. But what happens with people is that don't back this is that one day they will face a loss streak. All right, they will face a loss streak no matter if it's the first week that they're starting trading the strategy or the second week, etc. Or let's say it's been 2 months, they will experience that loss streak. But since they don't have the data to back up the fact that this strategy works, they will then start, doubting the fact that this strategy works. So they will strategy hop and go see another mentor or go and try to do, and try to play another strategy. Which, in my opinion, if you backtest and you have enough data on a strategy, then it gives you a certain it gives you a mental clarity that you would have never gotten if you didn't backtest. You will be, you will never doubt your edge if you have 2,000, 3,000 trades backtested in a folder and you know exactly what happened in the last 5 years. This is impossible. So it's the approach. Backtesting will save you from making a mistake that is crucial, which is strategy hopping. Sometimes, yes, you should change strategies because I think not every strategy works. Depending on, if you use discretion or not, this could be, completely different. As soon as you add the discretion aspect, then it's super hard to know if a strategy actually is repeatable, or so I don't really use any sort of discretion really. But yeah, that's really my view on backtesting. This will save you from making crucial mistakes, which is strategy hop. And when you have so much data, then you're going to be focused on, trusting your plan, and you will never deviate from your plan. Someone DM'd me on Twitter. He was like, yo, Amos, I'm in a current super huge drawdown and I think I'm going to blow my accounts. Do you have any tips? I was like, back this to a point where you know that you just have to keep trading your strategy to get out of your drawdown. That's it. It's the only way for you to, make it, My biggest struggle, what is the bare minimum data collection you would recommend before going live scaling prop firms? I have a a hard take on that. I don't have the same view as everyone. Like when you go on, let's say, Instagram comment sections or YouTube comment sections, and then you see a video of a guy talking about, yo, backtesting is overrated. I never backtested and received this amount of payouts. And then you see the comments, everyone is like, yes, finally someone that shares my exact point of view, etc. You cannot think like the masses. You have to think in a way that will separate you from them. Okay, what most people think about is most likely not the approach to make it. That's just true in every single craft. So I think if you have less than 1,000 backtested trades using the same framework, the same kind of approach that is repeatable in the long run, in my opinion, you're gambling. My biggest struggle is waiting for the trade to come to me. Instead, I start fantasizing and seeing trades everywhere, which hurts my P&L. This, in my opinion, if you have a lack of discipline when it comes to taking a setup, it means that you don't necessarily have an edge, right? What does that mean? It means that you don't know exactly what you're looking for. You're just taking trades off of a large framework. What is, let's say, ICT? This is a framework of reading price. Taking a fair value gap play isn't an edge. It's just a framework. Understanding why the fair value gap works is your strategy, let's say. or the exact area on the higher time frame where price is most likely to reverse, this would be your edge. The framework is just, you know, entering in the fair value gap. So if you keep taking trades shorts and longs all day, I think you just lack a little bit of edge. You know, you should focus on finding a solid strategy in a time window. This would be my biggest my tip here. My biggest tip here would be to find an edge in a certain time window, right? Because time is a super important aspect of trading. I passed the evaluation in 20 days with small wins, no rush. I'll take it slow. I personally have the skill, but still want to do the evaluation. Yeah, this is a good approach too, you know. Some people just want to pass the eval to prove to themselves that they can make this amount of profits, and that's really good too, you know. Depending, if you passed hundreds of evals in your life, then straight to sim is possibly a good alternative, you know, depending on how long you've been trading. You never stop from receiving new knowledge in trading. Absolutely. No, I didn't take any trades. You guys hear stuff well? Do you guys hear my mic well? Pretty close to it right now. Is volume low for anyone else? Wait, let me see. Volume of my mic, is that it? Is that the volume of my mic? I think it's here. Hello? Is it better? Tell me if it's better, because I think the volume of my mic is pretty low. Is it good right now? I turned it up a little bit. Mic is all good. Yeah, just depending on the volume you have on YouTube, I guess. Better. All right, perfect. Because basically I put it low since when I record videos, sometimes it sounds echoey. So yeah, the lower I put it, the better it is when I record videos. All you Algerian, yes. There's a lot of comments I didn't read. Amas, how do you deal with this problem? My idea is correct, but my execution sucks. Your idea is correct, but your execution sucks. Maybe have a lower RR. Sometimes I see too many people trying to catch reversals and put super tight stop losses, when if you know that you are good and you can read price on the higher time frame, your framework on how to read price is accurate most of the time, then, you know, let your stop loss a little bit more room to breathe and see what it does. You know, even if it will feel quite uncomfortable in the beginning, it may save you from a lot of losses. Guys, like the stream to get it out there for more views. 52. Yeah, you like guys. I need more likes. Good comment right here. Please like the stream if you think I'm spitting. But those are really good questions, guys. I like those. My big problem is in backtesting, execution was good, and then when I do live, I cannot do it. When you're in backtesting, you do well, but when you are in the live market, you don't do well. So is it psychology based or is it completely technical based? That's why you need to focus on that, really. You know, um, if you know that your problem is psychology, I keep saying one thing is that do not compare yourself to anyone, right? The thing is, I will I will tell you something. With this industry, the biggest problem with this industry is the fact that there's no barriers to entry. Okay, a super low barrier to entry. What does that mean? It's basically trading is basically the same thing as, you know, a casino in some way, right? What do I mean by this? A casino where some people have edge, and a casino where some people are, entering with size that they're not supposed to, and then sharing their profits on Twitter or on YouTube, and you think this is repeatable. So let's say there's no barriers to entry. A lot of people will come into trading and see the people win super big amounts or be in insane win streaks. But one thing you need to understand is that slow and steady wins the race all the time, right? The quicker you try to make your money, the quicker the market will snatch it from you. So do not compare yourself to anyone, because this is an industry where there's a low barrier of entry, so people can get lucky. That's what I mean. You will see people getting lucky, having big win streaks, and they up their size, and then you see their profits on Twitter, you see their profits, on YouTube, and you're like, damn, this is achievable. But in reality, you don't know how they got their profits. You cannot compare yourself to them, all right? Stay true to your own path. Focus on the input, focus on the amount of, the amount of progress you can make in a day, the amount of efforts you put into your craft. Then things will come. But I think, in terms of psychology, I think the biggest hurdle for a lot of people is the comparison aspect. They're like, damn, this guy is this young and he's making this amount of money, and he's in a big win streak. He has this win rate. I'm doing something wrong. Don't focus on him, because first, you don't know exactly how he got those profits. If he could show you a payout, but this payout was not really a payout that was a legit payout. I mean, by he over risked, let's say, or he took trades that were not his strategy. That's what one thing about trading is, that you could definitely get paid even if you're not respecting your rules, which is one thing that is so don't focus on profits, all right? Don't focus on anyone, just focus on your own path. Psychology wise, this would be my best advice. Do you guys think you compare yourself too much to other people, or it's not the biggest problem? What is your biggest psychology issue in your opinion? I think for most people it's the comparison. They believe too much of what they see online. When you guys need to know, like I keep saying, if you get paid by a firm, okay, let's say Tradeify, if you get paid, you are a good trader. You made a decent amount of return. Okay, you had a $2,000 drawdown and you made $2,100 of profits to request a 1.5K payout. You are a good trader. This is 100% return. That's how you need to see it. If you had a live account with a lot of money in it, you would have made 100% of that account. Too many people have a screwed vision of profitability, like I keep saying to my Discord. You are one of the few transparent guy in the trading community, and unfortunately are blind by the gurus. Been following you in your Discord now, and I just wanted to tell you congrats. Thank you, Kodak. I appreciate you. Thank you. Man, I've been posting my P&L every single month from last May 2024 all the way to now. Yeah, not every month was easy, Some months it was really hard. really, really hard, you know. So are there times you change which strategy you trade, or do you just stick to one main strategy? I see you have different ones on your YouTube. Yeah, really good question. I have, yes, I have different strategies, and basically I split them depending on my account. So let's say I have 5 Tradeify. I would, let's say, split one account for, you know, a strategy that is a little bit more uh, aggressive, and then copy trade the rest of the 4 on my main strategy, which is something that I don't really talk about on YouTube and only talk about in my mentorship, which is my main strategy with a totally different framework, totally different timing. Um, but yeah, on what time frame do fair value gaps work the best at the market open? Really good question. I would say stick to the 1 minute chart at the market open. Yeah, market open 1 minute chart if you want to look for inversion fair value gaps. 1, 2, 3. Yeah, I think it's good advice. Which session works best for IFVG concepts? New York session, 100%. Jade Cap tweet last night was hilarious. What did he what did he say? I follow you on Twitter. What's up, Slim? How are you doing? So right now I don't see any trades. To be honest, the market is pretty much dead with this accumulation. But I didn't see a lot of people telling me what was their biggest psychology issue. I want to talk about that. I think psychology, my view on psychology is that it's overrated, right? You truly start seeing and you truly start understanding what is psychology as soon as you have a real edge. When you know you should have a certain return because your strategy actually works through 5-10 years of data and you're not performing, now you will start having real psychology issues. You're going to be like, what the fuck am I doing? I have this win rate, I have all the data, the right data, and I'm still not making any money. I am the reason why I'm not making money. So now you're going to start tweaking. That's real psychology issues, in my opinion. Psychology issues like I want to make more money, I'm comparing myself. There are, you know, psychology issues that are, you know, they're present. You know, you will see them in trading, but you will see them a little bit more with beginners. You know, if you've been trading for like 3, 4, 5 years, you understand that you need to stop comparing yourself, because if someone makes more money, then you don't know how he made that money first, and if he entered 25 cons to make back all the losses he made in the last 2-3 weeks, you never know. So don't compare. But that's really it. I have 400 Tradeify accounts. Blue 2. I have 2 more left. I tilted at 1.5. Yeah, just don't look at your profits. Just keep trading. If you get the payout, get the payout. But yeah, of course we trade to make money. That's one thing. You know, as soon as I'm gonna talk to someone, everyone knows that we're trading to make money. All right, like, yes, but for you to make money, you cannot think about the fact that you will make money if you pass that next trade, because it has nothing to do with being profitable in the long run. Why you chose scalping, and what's the reason behind one-to-ones? Behind the reason behind one-to-ones is really because I'm trading prop firms. It's really because I'm, let's say with Tradeify, the reason why I stick to one-to-ones, like I said, is the risk of ruin. So the higher your win rate, the less losers you can take in a row. So if you have a 70% win rate, then you cannot take more than at least like 4 losses in a row maximum. And I know my risk management. I know I risk from somewhere close to like $300 to $400 per trade. So knowing that, I know that even on the worst case scenario, I wouldn't blow my accounts. But if you have a 1 to 3, 1 to 4, it's a little bit harder to not blow those accounts. That's what you should know. Of course, depending on your risk, if you have a 1 to 3 and you risk 100 to make 300, it will still take you a long time to blow that account, depending on your approach. The strategy where you have to wait for a 15-minute an IVG on 1 to 5 is this strategy where you could personally trade every day. That is a strategy that I call an intraday scalp volatility. Right? Just by the way, right here, we swept the previous candle's low. We couldn't close below it on the 1 hour chart. We have a fair value gap here up there. So this is a good draw on liquidity, like I said. Also, right here, we're breaking structure to the upside. We reacted to the wick, so we opened lower, formed the bottom wick of that H1, and we're starting to displace to the upside. So this fair value gap right here should be the draw on liquidity. I talked about psychology too much, but the structure that was forming right here was pretty clean here for that trade. I don't take those kind of trades though. I think they're a little bit risky. Wait for better opportunities. But yeah, returning to your question, the strategy where you can scalp based on the 50-minute and 1 minute, 2 minute, 3 minute inverse fair value gap. This is a good strategy for intraday scalp volatility, which means that when the market is going to be volatile, you will see good possible reaction from those gaps. Of course, sometimes the market will be in a state where it's chopping a little bit more and less volatile, so you would want to stop trading that when it's not performing too well. But of course, like in terms of a strategy, it's a pretty decent strategy. You don't need too much to make things work. You just need to understand where your losers come from. If you take 2,000 trades and then you take a look at all your pictures, those losers will have something in common. How do you join your mentorship? Explain about. Yeah, I don't really want to get into that on my YouTube, but the information is in my Discord. But the mentorship is currently closed right now. Mentorship is currently closed because I only take like around 5 to 7 students. Like I call them students. Who am I to call them students? But I call them like my brothers, I take 5 to 7 brothers and show them, my own personal strategy that I, of course, don't disclose on YouTube. How old are you? I'm 22. Pretty young. Which prop firm is the best for futures? Tradeify, 100%. Tradeify. I made a video on all the accounts you can purchase with Tradeify and which accounts I think are the best. You'll see, but in my opinion, Tradeify is the best firm, 100%. I will not name, other different firms, but for me, a firm that could potentially either deny your payout or ban you is not even a firm you should look at. Right now we're seeing on more and more that firms are starting to ban some traders here and there, and their rules are a little bit shady. That's what I like about Tradeify, is that no rules are shady at all. Everything is clear. They will not deny your payout. Will not deny your payout. That's first, and second, they pay you instantly. If you are gonna stay patient and you want to be rewarded with the hard work you put in, why would you go for a firm that could potentially deny your payout because you DCA'd into a trade? Like that does not make any sense. Or a firm that will possibly deny your payout because you bought more than 10 evaluations on the month, when you try to purchase more than 10, they will let you, but if you ask for a payout, they will deny you. In my opinion, there's so many weird stuff happening that not a lot of people are talking about, that are completely wrong, about other firms, which is what I like about Tradeify, is that everything, like, did you ever hear one bad story from Tradeify? I heard multiple, like, extremely bad stories on every single other firm. I'm not even biased at all. Any students from India? I think there's quite some people from India that are especially looking at YouTube videos. That's 100%. Yeah, if you like 1 to 2 scale, that's still really good. That's a really good RR to have with a 50% win rate. Just find what works for you. I know people that would never be able to trade a 1-to-1, and that's all right. But for me, I cannot ever have discretion in my system. Why? Because I know I'm not that guy. I can't get paid on my decision making. I have to get paid on something that I already backtested in the past and that has proven to work. Advise on how I should trade 5 Tradeify 50k accounts to pass to payout. Are those 50k straight to sim-funded accounts, or are those 50k gross, advanced? Because your approach on the market, depending on the account that you chose, is going to be different, 100%. You're going to have to play a little bit slower on straight to sim-funded accounts. Like, basically, if you have to pass an eval, then there's 2 approaches. There's the aggressive way to pass the eval, and there's the passive way to pass the eval. And that is completely based on the amount of money that you have in your bank account. The more money that you have, the more aggressive you can be, and the quicker you can get your payout. Is that the right approach? For some people, yes. For some people, no. But that's just it. So you have advanced 50k advanced accounts, and is the evaluation passed, or you're looking to pass the eval? I like the 35%. Yeah, growth is really good. Growth is one of the best, in my opinion. If you can pass the eval, it gives you the biggest return on investment. But passing the eval, for some people, is hard because they don't take it too seriously. That's one thing also. Okay, you need to pass the eval, then get the payout. So you have 50k, which means that you have a $2,000 intraday trailing drawdown, which means that it's based on your equity and unrealized profits. So let's say you start with 50k and you're in a trade and you're up $600 on that trade, and it stops you out to break even. Since you didn't take profits and your highest equity on that day was 50,600, then you just lost $600 of drawdown. That's what it means. All right, so it's a little bit harder to pass. you need to take it slow, which means that you cannot over leverage, because if you are in a situation where you take a trade with, let's say, 3 or 4 contracts and you lose, and that trade was up in profits, it will most likely blow your account. So you need, in my opinion, to trade, I would say, like, what, $300, $400 of risk, taking it slow, that would be good, in my opinion. But not financial advice, of course. That's just how I would do it for me. How much is your mentorship? Oh, how much? How much? um, the mentorship is closed, so just go on Discord and you will see you'll see all the informations there. But it's not, as you guys know, it's not something I really promote. That's really for the people who want to go out of their way to know exactly what I do. But yeah. So we filled the H1 for value gap right here. Now we have a market structure shift and an order block combined. What is it really? It's a head and shoulders. So you see here we have a high, a low, a higher high, and then we put on a higher low right here, and then we broke structure to the downside right here. So we have, an up move before breaking the last low that broke the higher high here, right? Which creates a breaker, then an order block here on the 1 minute chart. So those two structure right here, and those are pretty strong to hold price. So right here we rebalanced to that order block, started to shoot down. We also have a fair value gap right above it. Still nothing for me. We're still like stuck inside this range. Best thing for me would be like to see a move down towards these lows and start rejecting. Those stacked lows right here are my concern. I don't want to long that. Do you use sequential SMT? No, this is not a concept that I use, unfortunately. So right here we have a 1 hour fair value gap that got filled. Exactly, literally equal highs, perfectly equal highs. And then we have a 2 minute inverse fair value gap right here. So this could be a good signal that buyers are getting squeezed, sellers are being aggressive on price. But I'm not gonna get into a trade here. But damn, pretty aggressive shoot down. 2 minute. Oh, so it was a 3 minute and 2 minute inverse. I don't think a lot of people took that because of the equal highs though. One of my mentors from India suggested your name, labeling as a young aspiring trader. Since then, I watch your videos, even I'm not following your strategy. Damn. Thank you so much. That actually means a lot. Thank you. See people from different parts of the world. That's insane. But I just, one thing about me is that I always keep it real. I always speak my truth, what I believe is right. You will never see me post about, stop backtesting or, I always have the same takes. It's always, my takes are close to each other, 72 people in live. Insane. Yo, spam the likes, guys. Spam the likes so we have more. Maybe if we have enough likes, I'll do a giveaway. I'll reach out to Brett right now. He has to respond though. Come on, more likes, more likes. Yeah, those equal highs screwed it. Like for a short-term scalp. That's not bad here. What I want to see now is price, consolidating right here a little bit and then give us another push down. That would be the best thing here. Let me look at other pairs. ES already took out that low. Let me see YM. I'll put a what time is it? 1. I'll put a line here. If YM breaks this high here, I'm gonna be interested in taking something. Where are you from? I live in Canada. I'm born in Algeria, which is the country next to Morocco. And I need to know how to put my chat. That is insane. Like I actually cannot. I got funded with a 5K account, and I want to grow. What's the best approach? Take my first payout, $100 and then pay another 5K account, or go straight to a 15. Take the slow and steady route. In my opinion, it's always better. Being patient. So stay patient. Show yourself that you can, see consistency, and then whatever you want to do, either scale, put more money into the business, do it, but you will know when to do it. You will not even ask if it's the right thing to do at that point. When you're ready, you're gonna know you're ready. Native, yeah, I was born there. I was born in Algeria. Yeah. But raised in Canada. So yeah. We gotta, if you're looking at this live and you're from the US or Canada or the Europe, let's say, you guys need to acknowledge how lucky we are for living in those countries, because we have life so much like on easy mode right here, depending on where you live. But man, having a currency that is strong just makes the difference when it comes down to having especially in trading, having the currency that is strong in your country will make the difference when you're going to buy accounts, and by you also executing your plan for you to become profitable. It's super hard in some countries. Let's say if I take my country where I was born, the currency there is so weak that even if like at one singular account would take you 2 months to buy. So if you're from the US or you're from a country with a strong currency, acknowledge the fact that you are so lucky and blessed to be in this country, because you have the amount of money that could potentially make the difference to execute your plan and change change your life. Someone from like he said, like Nigeria, Kenya, or any countries from Africa, South Africa, it's hard. Isn't it a bad entry to continue lower, sweeping liquidity below? Yeah, that could be your framework on that trade. I'm just waiting for more confirmations right here, but that is indeed like a second distribution. We filled the 15-minute gap, the 1 hour gap right here to the tick, and then started to shoot down. Let me see here if I was looking at the right chart. Okay, yeah, NQ created a perfectly equal highs. So right now we're shooting down aggressively. Holy. So yeah, right here it's the Asian lows. Asian lows that we're going for. Also low resistance liquidity. You can see it on the H1. When you look at the H1 and it does like, it has some accumulation that looks like this. If you go on, let's say, the 5-minute chart, it will be an insanely huge low resistance liquidity run like this, a huge trend line liquidity. So we saw here, we did sweep it on US, that's for sure. Yeah, displays through that. That's also one thing about trading NQ, is that the correlation between ES and NQ has a huge impact on how price delivers. If you're trading NQ and you're not looking at ES, I think you're missing some information. How many likes do we have? How can I see that? 39. Come on, we're 62. Click on the like button. A lot of people ask me like what they should do. I don't want to, give you like a plan or advice, because I cannot give you financial advice. I'm not a financial advisor, so I cannot tell you like how you should, approach things. Well, let's say I passed 3 demo accounts, like you said, Mo. I need to. What do you need to do? You pass 3 demo accounts. I think first thing, when you go into trading, make sure that you don't need that money to live. That's the first thing. So if you know you're in a comfortable situation, then and you don't need that money to live and you're good, then execute your plan as you think it should be executed. So let's say you have a lot of data on your strategy, you know it works, then investing on a prop firm account could be your approach, but you already did what I would suggest you to do, which is backtesting. That I would always suggest. But you already did what you needed to do. You already put in the work. So right there is just a question of, do you have the right amount of money to invest into your accounts? Could you explain it a little? The correlation, one is stronger or weaker than the other, but yeah. So basically, we know that there is a concept called liquidity in the market, which is basically areas where there's a lot of orders. Basically, it could be right here, there could be a really big pool of stop losses right here. Let's say if you buy, you would put a sell stop right here, but there's sell stops, but also sell limits or buy limits. There's a lot of orders right here. All right, so both sell stop but not sell limits, but either buy limits, sell stops right here at this low right here. So if we know that there is going to be reactions from those lows or areas where there's liquidity, if NQ goes for that low, let's say right here, let me use the two charts right here. What happened right here was that we had this low on NQ and ES. They're both correlated pairs, so they should act exactly the same. So what happened was that so ES was here and then went to sweep those lows. Boom. So NQ swept those lows, so created a lower low, right? When NQ, couldn't sweep this low here, right? It created a lower low right here on the lower time frame, but it couldn't sweep this 15-minute low here. So in terms of higher time frame structure, it created a higher low. All right, so basically right here on the chart, let me just show you, NQ looks like this, while ES looks like this. So when this happens, we know that there is reaction from lows, right? So liquidity is driving the market. So if ES took out liquidity, then and NQ is a correlated pair, then sometimes NQ will not need to sweep that liquidity because ES already did it. So that's what is the correlation. So if ES or NQ hits a target, then the correlated pair don't necessarily need to hit that target anymore because the contracts most likely already got offloaded. So that's really the correlation. So you look at structure, and if there's a difference in structure, it could be a potential reversal signal. Right here, let me just show you what the S chart looks. So right here, look at ES. If I go on the 15-minute chart just like there, boom, we swept this low, right? So on the 15-minute chart, we formed using this low here. On NQ, we look like this. And on ES, we look like this. You see it? So that's the correlation. Liquidity aspect, basically. So if you see that one pair took out liquidity when the other didn't, could be a reversal signal. Could that be, do I use that a lot in my system? Not really. Like, I use it to get out of my trades, but not really to enter. Bro, any giveaways today? If we get 100 likes, there is a lot of chances of us doing a giveaway. 100 likes. I don't know if it's gonna be possible, but everyone here, at least bare minimum, has to like this. So let's see if you guys are strong enough. Because if we get 100 likes, I'm telling y'all, I'm gonna try my best to do it 100%. Ask questions, guys, or it could be anything, psychology. Anything regarding psychology or your approach, what do I think about this, that, my take on this, that. Twitter beefs. There was quite some Twitter beef, this year. Quite some Twitter beef, I'm not gonna lie. That is something I don't really engage into too much. I don't think it's worth the time. Sometimes you just gotta stay in your lane. I want to ask, how many models do you use? If you want me to be completely honest, I only use two, right? Two models. I have two models, and yeah, that's it. And I will be trading this model for the rest of my life. That's 100%. If prop firms were not a thing, it would have been really hard, you know? Especially, like, you need to also be grateful for prop firms, because there's such a huge, there's such a good, opportunity, that it made me work more to know, like, to understand a strategy that actually works, because since I knew there was a good way and a good opportunity to make money with a low initial investment, then I locked in. But let's say I had to, work 5 years to put 100K in a live account. I don't know if I would have worked so hard on the charts, I backtest this 15-minute for value gap, 1-minute IVG, and it's negative. Depending on how you do it and what's your confluence. But if you want me to be honest, that's not what I use. Right? That's just an approach that I know works for prop firms. And if you don't go for one-to-ones and don't execute it perfectly, of course you're not gonna find consistency. And if you add context to it, then it's totally different again. Adding context to that entry model and not just blindly taking trades off of that change the game 100%. Why nobody beef with you? I don't know. I don't know, man. I'm just a chill guy. I don't beef with anyone. I don't know what should I add to make it profitable. Look at my last video, right? Look at my last video. That will be my look at my last video. You will possibly really like it, right? Possibly really, really like it. About discipline, how did you get there? I trade one trade a day. I don't know exactly what you meant, but about discipline, how did you get there? Really, for the discipline aspect, there's not really a way to start being disciplined other than failing so much to a point where you look at yourself in the mirror and you're just disgusted with the amount of time that you lost. That's really what happened to me. It's like looking at myself, like I've been trading for a year and I still have made no progress. I know exactly where I went wrong. I kept doing this mistake. I did not backtest. I don't know exactly what I'm doing. Every time I enter a trade, my heart is racing because I don't know what's the outcome. I don't have anything to hold on to in terms of data for it to put me in a good mental state. So you just have to take so many L's to a point where you're tired of taking L's, and then the W's will come. 2 L's, 1 W. All right. You're going to short this IFVG. Let me see. Not bad, like perfect sweep here. And also 1 minute perfect IFVG here for the high. We tap the 5 minute fair value gap and then inverse the 1 minute. Like I said, like inversions in terms of understanding what's happening on the order flow type of the market, it's really good, especially on NQ with the volatility that this pair has. Inverse is possibly, in my opinion, the best concept to read the lower time frame. In terms of accuracy, let's say blindly entering off an IFVG or blindly entering off an order block or a breaker or a change in a state of delivery, the IFVG outperforms them. Let's say if you are completely new. How many hours do you trade a day? I look at the chart for most of the day, but I only take 1, maximum 2 trades a day, you know. But like I said, I usually look at the chart when the market is volatile, which is during the macros. ACT macros. Man, you gotta give him his flowers. You gotta give him his flowers. Like, no matter how much you hate him, or, you know, I know there's a lot of hate towards him, but damn. Some of the concepts are pure gold. Do you trade NQ only? Is the IVG work on currencies like you or gold? I don't think it is. It's gonna work like it works on NQ at all, because they're less volatile than NQ. Usually, what you will see is that those pairs will not have a clean chart like this on the 1 minute chart. If the 1 minute looks clean and has gaps and doesn't look like a piano, it means that the pair that you're trading is super volatile. What most pairs look like on the 1 minute chart is this, is the action during Asian. It looks like this. There's like gaps through, no up wicks sometimes in some candles. It looks like this. So it's really hard to read. This is not clean price action. It's not, you know, volatile price action. You know, what you get during Asian or London is what, you know, a forex pair / gold will give you on the 1 minute chart. But yeah, coming back to the question you asked, Manu. Man, you said, I don't know what should I add to make it profitable. You will never know what to add until you do so much work that you will just find it on your own. What I would suggest you to do is go in a backtesting software. Let's say you use Tradezilla, because I think right now it's one of the best. Take pictures of all the action from 9:30 to 10:30 and do that for a whole year. Then look back at all the pictures and you will see recurring stuff happening. Recurring stuff. And don't just look at the 1 minute chart, because you will not be able to frame a trade off the 1 minute chart. You'll be able to enter and understand who's in control of the market on the lower time frame. But in order to frame a trade and understand the higher time frame direction of the market, you need to use higher time frame candles, higher time frame charts. So go in the lab. All right, that's the first thing you need to do. Cannot do a bodybuilding competition without going to the gym. That's the exact same thing. It's literally the same. Like, this is the best comparison. Or going into a boxing tournament without going to the gym. This is the same thing. You're playing against people that are real good at what they're doing. So make sure you know what happened, exactly what happened in the last year, every single day from 9:30 to 10:30. Have pictures of the 1 minute chart, the 5 minute chart, the 15, the 1 hour, the 4 hour, and the daily. And then if you don't find something after all that work you put in, then you can quit trading if you want. But I can guarantee you that it will most likely not happen. It's just what differentiates you from being profitable is the work you're gonna put in, and you want to invest in that craft. You're short, praying for you, my guy. Is that good advice? I think that's good advice. Backtesting advice, never financial advice. Backtesting advice on GTA. Like the streamer is on GTA. I feel like a streamer right now. But that's good. Like, I have so many people, asking me the same kind of questions, and it's always the same thing. It's always it's like you saying to me, Amos, I cannot get into Division 1 in soccer. I tried doing what this mentor told me. He told me that if I did if I faked out going to the left and then went to the right as a left winger, then if I mastered that, I would become a pro. And I did that, and it didn't work. You need to do more. You need to do so much more. Can you just give a look at the Indian market? Can you search Nifty 50? What is that? I don't know if we have it on Tradeify though. Nifty. Oh my. Oh. Yeah, you see, like, this is what Forex pairs can look like on the 1 minute chart sometimes. Damn. 1 hour chart, Nifty 50. I don't know where price is gonna go, I'm not gonna lie. Going back to NQ. Now looking for price. Basically, the best thing that can ever happen is if we sweep the sell side right here and we start market structure shifting to the upside. That would be, the best case scenario. I would like that. If we have this, we're blessed. I'm going to take a trade. Nifty 50, bro. What is this? Where are you guys from? I want to know. I cannot do a poll. How do I do a poll? Let me see here. No, I can't. Are you guys from US? From US, I don't know, Europe. I don't know where you guys are from. Yeah, I want, Oko, I want that for value gap. Like, because it's an H4 right here. You see, like, if we go below this low here, would dig below the daily open, form a nice wick, it would be insane. It would take a whole, at least 50 minutes to develop, but we're good. I really like that idea of going long after that sell side sweep into that H4 gap. Yeah, looking for that distribution of that candle, 100%. Greece, damn, insane. Canada, come on, Adam. Canada. Look at the daily chart right here. That is good. It looks pretty bearish. What I would think is I would have this line drawn right here. So if price is trading still below the previous candle's high right here, so the previous daily high, and we close like this, we will most likely shoot down towards this internal gap during the overnight session. Malaysia, US, Saudi Arabia from the ends. What does that mean? Ends. Netherlands? Is that it? No, you're definitely not the only one from India, I'm telling you. Just people are not commenting, but telling you you're not the only one. You guys are so much, like, it is impossible. What about 4-hour to 5-minute top-down analysis? All right, bet. Okay, let's do it. So 4-hour top-down analysis. On the 4-hour right here, what do we have? We have this candle being bullish, right? Then on the next 4-hour, we had a distribution to the downside, which created what? A market structure shift, okay, on the 4-hour. So a change in the state of delivery. All right, if you see a small down close candles right here, let's say you had a down close candle before breaking the high, and then we closed below the opening price of the last down close candle before the move up. Right here, this is a change in the state of delivery. All right, so I have this line drawn. I know that if I see a reaction right here, I would want to play shorts back towards the gap. This is a good confirmation on the H4. Then I go on the H1, boom. This confirms me what is happening on the higher time frame. This is a market structure shift, change in the state of delivery. So I know right here is where I will most likely see the distribution down if we have a if the sellers are strong enough. Okay, if we're going to distribute to the downside, this is the PD array that I would want to use. Now 15-minute chart right here, we have the same thing. So 15-minute order block, we move down. One thing that is pretty difficult about this trade is the fact that if you use the correlation between ES and NQ, we have an SMT. So this could be a potential protected swing low here to have a a drive back to the upside, so a reversal. So now it becomes pretty hard to gauge that trade here. Like, shorts do look good if you don't take into account the SMT, but if you take into account the SMT, then it's quite risky, you know, in some sort. So then you scale down to a 1-minute chart. You had a perfect buy side liquidity sweep right here into the fair value gap, market structure shift again. So like, in terms of like time frame and alignments, I would say that shorts look good, you know, but that SMT makes it a little bit weird, if that makes sense. But top down analysis, this would be it, right? If it makes sense. If you want to do a top down analysis, what you want to look for is body candle closures, wicks, what is the structure form, so order block, breakers, inversions. All right, and then you frame your trade. Right here on the 4-hour chart, created a market structure shift on the 4-hour. So you have this block of orders that you could use for potential sell side liquidity targets. All right, we closed, but right here we still didn't wick this 4-hour low, still didn't go and sweep that sell side liquidity. If I look at the daily chart right now, we are starting to reverse, and there's only 2 hours and 51 minutes left for that daily candle to close. So if we cannot, you know, come back all the way to this line right here, which is the previous daily high, then there's a lot of chances of seeing a short setup. All right, so let's say if you were a short on the higher time frame, this is not a bad short. Let's say targeting sell side or, you know, other levels of liquidity just below, especially knowing that when that daily will close, we'll most likely see a move to the downside. What you can do is wait for a better possible opportunity. Wait, for those lows to get swept because you're scared of the SMT. And then if you see a market structure shift, then all right, this is a really good entry to take. There's SMT at the Asia lows, so like it's pretty hard. It's pretty hard to gauge here. But like the target looks clear on NQ. If ES didn't sweep this low, the target would have been really, really clear. But that's what top-down analysis would look like. Other questions, guys? Other questions? We need other questions. Spam the likes, so we will most likely do a giveaway. We're at what, 58? Yeah, we need 100. If we have 100 likes, I'll do a giveaway. All right, 100 likes, I'll do a giveaway. There's 58. I need 100 likes. So, send the link to your brother, your sister, your father. And yeah, if we have 100, then locked. Can you compare the plans that Tradeify offer? Yeah, of course. So you have, let's say here you have the advanced, you have the growth, and you have the straight to funded accounts. Let's use, in terms of return on investment, I would say let's just use 50Ks, all right? But because I remember the profit target and stuff. But advanced 50K, you need to pass an evaluation, all right? You need to make $3,000 of profit. So that's eval, right? You need to make $3,000 with $2,000 of drawdown. And then this drawdown is an intraday trailing, which means that it's not end of day, which means that if you have unrealized profits, it will count them as your drawdown. So let's say you're up $600 of profits in a trade, and you get stopped out to break even, you just lost 600. So this account is cheaper, right? It costs around like 44 bucks or 45 bucks with code AMAS, right? Code AMAS, highest discount. If you're a G, I heard that once you put that code, you increase your win rate by like 30%. So all right, so then the advanced account, let me just do the math exactly for a 50K account. I don't want to talk shit, but it's it's 69 times 35. Yeah, because it's different, but it would be like around like $42 to $43, all right? And you need to pay an activation fee of $125, all right? That's the first. Then, so code AMAS, by the way, if you want the discount. Then the growth, all right? Listen up, because the growth is different. And in my opinion, if you know how to pass an eval, this is an incredibly good account, all right? Incredibly good account. Why? All right, you have an eval of $3,000, all right? Boom. You have $2,000 of drawdown, all right? But it is an end of day drawdown. Boom. So that's better. So if you're in a position and it stops you out of break even and you were up 600 on that trade, then you didn't lose any drawdown at all right? Because it's end of day, it doesn't count with your equity. All right. So then the growth is $97, zero activation. That's it. So $97 on the 30%. So right now it will be a little bit cheaper, I think, than 97. But with $97 right here of growth account for a 50K, this is the 50K. So if you know how to pass those evals right here and you buy 5 accounts, then you have potential to make 15x your initial investment. All right. Why? Because you can request a $1,500 payout with an initial investment of 97 per account, which is more than 15 times your initial investment. So that's just for evals. All right. Evals, so you need to pass evals on those 2 accounts. If you are a G and you don't want to pass any evals because you cannot respect your rules, you cannot you trade with too big, your size is too big when you trade evals because you don't really feel any you don't feel the need to respect your plan, and you're just too you're not focused on the right stuff when you're trading eval, all right, because you're not making profits immediately, then go and take straight to sim funded accounts. This is immediately going to get you funded, so no eval. You don't have to wait at all to get funded. All right, so these are the different plans. And then for you to get paid out on a straight to sim, you would need a $3,000 profit target, and you have a $2,000 drawdown, and it's end of day. All right, if you have growth, it's $2,100 of profit target, which is insane. Actually, don't know. I couldn't believe my eyes. $2,000 of drawdown, that is end of day also. And then for the advanced, you have again a $2,100 profit target, $2,000 drawdown, but the drawdown is intraday trailing, so just like Apex, let's say. I'm gonna buy some growths with your code. That is a really good idea. Growths are great. Appreciate you. But yeah, these are the plans really. And right here there is a 35% consistency rule on those 2 accounts, and right here there is a 20% consistency rule, right, on this account. But for me, the best is the straight to sim. Why? I hate evals, right? I cannot treat them as my real account because I don't see profits immediately, and I tend to get a little bit too impatient. Yeah, can I put music? Of course. Absolutely. 60 people are coming in with their second, third account to get the giveaway. It looks like people are working overtime. How many likes? 63. Okay. I don't know if you guys will be able to do it. That will be hard to pull off. I'm not gonna lie, that will be hard to pull off. And right now also the action is pretty lame. Yeah, also 7-day payout. So you need 7 trading days to get paid rather than 10, which is absolutely insane. You have a real account. Have a real account with Tradeify. Yes. What do you mean 1-day difference? 1-day difference. It was 10. Can't really hear the music. Can you hear it right now? Better? Tell me if it's better. Yeah. One day they have the edge on that. You have to trade 7 rather than 8. Do you only trade 15-minute fair value gaps? No. Like, guys, when I show you, let's say, something on YouTube, this is, let's say, free knowledge, stuff that you can start applying to your strategy because there are different confluences and it's a good way, let's say, to read the chart. But I don't only use that, right? I don't only use that. I use, frameworks to read the higher time frame chart. The higher time frame chart is what's going to tell you the story of where price is most likely going to go throughout the day. And then if you scale down and you take your lower time frame confluences and it's already has a high win rate, but then you use them in a way to pair them together with your bias, then that's how you do stuff the right way, in my opinion. Like, in terms of entry models, really, guys, I only use this. It's going to be the same thing every time. I only use either the break of structure, so the order block entry, all right? So boom, the neckline right here is called an OB, all right? A bullish order block. So I would wait for price to pull back here, then I would enter on the pullback to the order block. That's the first entry model. Second entry model that I use, the breaker. I have a low, high, lower low, higher high. Then boom, this is, I would wait for price to come back to that zone here, boom, enter, and scalp the high. This is always basically what I do. This is, all my trades look the same if you go on Twitter. All right, so boom, this would be a BB, all right, plus BB, so breaker block, and I'm always targeting the most recent high or the closest buy side liquidity or sell side liquidity pool. All right, then I have the third, which is inverse fair value gap. So boom, create a gap here and you wait for it to get inversed, and then you wait for a pullback, boom, and you would scalp longs, okay, towards, let's say, the most recent high. This is literally the only thing I use in terms of entry models. And then what people don't understand is that these entry models are not the reason why you will lose a trade or not. Like, this is a confirmation on the lower time frame that will tell you, okay, the buyers are stronger, we broke structure to the upside. But for you to get the right timing and know exactly when price will break a high or a low without hitting your stop loss, that has to do with the higher time frame. Oh my god, so many people are getting chopped up right here. This is where a lot of people blow their accounts. Going short, going long, going short, going long. Hopefully you guys are chilling. Any giveaway? No giveaways for now because I don't have 100 likes. Until I have 100 likes, no giveaways, my brother. It's always about the framework. All right, let me give you an example right here, like I gave it to you last time. What is a framework on reading price? One framework, let's say, would be the gap fill. Why is it a good framework? Because you have an understanding of what's happening on the higher time frame. Let's say you close here on the previous day, and then on the next day you open up right here. What does that tell you? It tells you that you're in a premium, plus if you don't fill the gap in the beginning, then the 930 move was just a Judas swing, so it should be a fake out. 930 is an influx of liquidity to go to a higher target to then offload contracts in the opposite direction most of the time. All right, so you could find a better inversion right here using the gap, let's say the opening range gap, as your way to determine the bias. All right, that's first. Let's say this is a framework. Another framework would be, let's say you have liquidity and you would use internal liquidity let's say external liquidity to internal liquidity. So let's say here you would have buy side and sell side inside this range, all right? Boom, and then you would wait for price to displace towards a high, and then leave a gap here on the 5-15 minute chart. And then if you see an inverse right here, this is a good framework, because let's say if you reject the buy side right here on the time frame you're looking for, let's say the 15-minute chart, you cannot close above this buy side, and then you have an inverse. That's a good play to go and fill the gap. That's a framework again, you know. So you need frameworks rather than entry models. The entry model is just a tool you'll use to enter the trade, but the entry is not everything. Nice, you half passed an eval. That's good. Wait, Patrick Wyland got... Oh my. What's the Twitter beef right now? Can someone explain to me what happened? In trading terms. Yo, who's your favorite trader on Twitter right now? Not me. It cannot be me. Let's say, who's the guy you're looking at on Twitter and you're like, damn, I like him. I want to know. Or even on YouTube, I want to know if there's any other people. Usually it's all the mainstream guys. But if there's any other people, you know, like underdogs that you guys are looking at. Zemco Capital. I don't know him. TJ, I know him though. TJ, I know him. Hydra and Sherman. Oh yeah, Sherman I know. Hydra I know also, but Sherman I see his trades. Candice? Candice, are you sure? Dave teaches. Alright. You know what? I love Dave teaches. You know why? Because he has good takes. You know, his takes are pretty good. He hates lazy people, so I like that. He called out Oh, okay. Damn. I don't know what to say. That's tough. But that's like a huge. He's a huge. He's a huge guy in the community. So that's tough. What is going on with the price action right now? You know, guys, I didn't take a trade this whole week. 0 trades. I didn't take a trade on Friday. No, I took a trade on Friday. On 3 accounts. No, 4 accounts. Not 5. So one of my accounts I didn't trade from Friday all the way to now. It's crazy. TT trades. Yeah. His YouTube videos are pretty nice. Not gonna lie. They're fast. Do you guys like 10-minute videos more than, let's say, longer 20-25-minute YouTube videos? I think that's the thing though with YouTube, or when you're creating content, is the fact that, you know, you cannot satisfy everyone. You know, like there's gonna be people who will say, oh, there, you didn't explain that as well, you know, or complain about you not going deep enough into a video, when you know that most people will not look at the video throughout the whole 25 minutes, you know. So you will never satisfy anyone, no matter what you do. But 10 minutes, I think, is a pretty good number. And one thing about me is, I think in my videos, I emphasize a lot on the framework, let's say, of, you know, making people understand the transactions between buyers and sellers, even if I don't even show it in an order flow chart, but just looking at gaps. So I think this could be super good for some people, but I think also some people are like, I don't want to hear that. I'm an ICT trader. I believe there's one singular algorithm that was coded by ICT himself. So, you know, depending depending on your vision of trading, I think sometimes you will not necessarily like some videos because of the take. Amos, German trades, Amos. Man, thank you. I mean, if you're in my stream, you probably like me, so possibly more chances of you liking me than hating me. Matter is, no, his name didn't matter. Okay. So time don't matter, it's the knowledge in it. Alright. Alright. That's good to know. But yeah. One thing, alright, I wanted to make a series on YouTube. What do you guys would like to have as a series? Let's say I was going to make, you know, a 25 video series or 30 video series. Would you prefer, let's say, what would you prefer? That's really the question. Is, let's say, an ICT for dummies a good idea, or like, you know, me explaining to y'all every single concept, ICT concepts that I know in 10 minutes. Let's say we would do like 40 videos, and as soon as you have, let's say, a question on ICT, you would then go back and look at those videos. I don't know. I think this concept was already used in the past though. That's the thing. What I like on your vids and TT trades, straight to the point. Yeah. Yeah, if you want to show a strategy, like, don't just talk about the strategy, you know, don't talk about too many stuff that are not part of the strategy, that's for sure. And that action is pretty horrible. In terms of like shorts right here, like this would be the area where you would want to see a 5-minute close below this low here, but I don't think you can have it. That's a good thing. I want to know how to find a strategy and journal. How to find a strategy is actually good. You know, I think this is not a concept a lot of people are doing. How to find a strategy and journal it and backtest it the right way, have the right approach, and have the right data. That is a good. Make a video on your daily routine and how you handle losses. Okay, yeah, for sure, I could. Four-hour wise, it looks like a short any day. 100%. You know what? I think I'll do that. You know, I'll do like a series where we take, let's say I take a strategy that, you know, has base, you know, a base in it, and then every single video we will try to tweak it and be 1% better than the previous day, you know. So we're like, let's say we'll do a 50-day series on how on how to find a profitable strategy, what is the approach you should take, the journaling behind it, which should be, you know, the work you put also behind it when you're looking back at, you know, your journal, when you're backtesting, you know, because journaling your live trades are good. This is a good thing, you need to do it, but journaling your backtesting is like you being there in the last 5 years. It's the same thing. Some people are like, yeah, I don't have a lot of market exposure. You could build so much market exposure by backtesting if you treat it as live. You know, some people don't take it really seriously, but in a way, you have to. Like, it's such a good way to practice. Yeah. So 4-hour wise, tapped inside this change in the state. I think we have some room to go to the downside, but with that SMT here, would have to watch out. That's for sure. We know that's a dangerous play to go to you know, short when there is a bullish SMT with Asia low. So we'll see. Yeah, series on finding an edge with your viewers, backtesting it, etc. Then buying a new account. Yeah, that would be cool. Damn. Thinking about it, that would be so fucking dope. So let's say like we start a series where day one we just take a strategy that, let's say, I already showed in my YouTube, but then we will refine it in every single video, then talk about the psychology aspect behind it, and, you know, what is the biggest hurdles about the strategy, especially when you're backtesting, or, you know, I took this loss streak and I was, you know, I couldn't believe my eyes that I lost 5 trades in a row, etc. Documenting it, and then taking into account passing the eval, or no, fuck evals, but we will immediately go to a straight to sim funded account and then get a payout with it. That would be insane. Yeah, that is That is one smart idea. I will, guys, by the way, I will, like the live sessions like this, I will do at least bare minimum 2 per week, right? So, like, I will be live trading. Right now, there's just no trades, but I will be live trading on YouTube um, twice a week, all the time. Like, it's not even a debate, right? It's not like I promise, like 100% certainty that I will. So that would be insane, taking a strategy from the core and then building it to a point where it's actually a real strategy and have all the data. And then if you want the 2,000 pictures of that trade of, like, let's say that strategy, then you would have to join my community, which is PFT, right? It would be for free for sure. Like, I'm doing on YouTube. I'm not gonna make you pay for that, but you would have to join the free Discord, or be subscribed to my YouTube. Bare minimum, you know. That is a good idea. Like, great. So this week was pretty slow, I'm not gonna lie. Like, the trades that I see are in, like, London, Asian, which is crazy. I see more trades in London, Asian than in New York. But yeah, I will definitely I want to do that series for sure. I'll use TradeZilla though, or backtesting. I think it's better because we would have the journal inside of it too. And if we can have like a, let's say, a linked journal where everyone can see it, that would be cool. You could just click the link and you would be able to see the journal. Like, not in a PDF version. Like, if you have TradeZilla, you click the link and then the journal pops up. I don't know all those pairs. GER40? I don't know that. But yeah, so right here, really took no trades today, and I'm not gonna take a trade right here, unfortunately. I'm gonna see how many likes do we have if we can do a giveaway. 67. Damn. Fell short. If we had 100, then I would have done a giveaway. But right here on the day, really, let me just recap it again. The first play, based on a framework that is most likely going to be the videos that will be about the strategy here, is this, because there is such a good, this is such a good point on the chart to get data, the right data, to know what is the percentage of chances of seeing the gap here get filled in the first hour and 15 minutes. So this is really a good base for the framework. And then let's say for the entry types, this is what is going to be hard to do, because yes, we have, let's say, inversion for value gaps, but there's so many trades exactly like those that we market structure shifted to the downside, and you had your opportunity to go short right here on this candle, to see the gap fill right there. So let's say this was a potential trade you could have got using this framework. And then for you know, plays, you know, bigger picture plays, I don't see anything for now. It was really a slow grind down today. We had to move down aggressively in the morning, but pretty hard to catch anything for the rest of the day. It was pretty choppy here, and right now it looks like it wants to go take out the sell side liquidity, exactly like I said with the top down analysis. 4-hour down close candle creating that change in a state. If you see a reaction from that level all the way to the previous daily high and it doesn't start closing above the previous daily high, it means that the daily candle will most likely close as an inside bar, so like a reversal candle, so it will most likely deliver towards a sell side liquidity pool. So right here, if you see aggression from the sellers and the buyers cannot break this level, so between those two lines, you have quite good chances of seeing sell side. This is basically it. So then let's say shorting 15-minute, using 15-minute as your down close candle right here, stop loss above this high, and targeting the sell side right here. Not a bad play, you know. I'm not going to take it, but that's really using the top down analysis, that's a really good play in my opinion. All right, gotta shoot. Thanks as always, Amas. Shout out to you, Oko. Appreciate you, my guy. But yeah, so if you want, you know, a short opportunity, I think on the 4-hour we look pretty bearish. It's just the SMT that is the thing preventing us from shorting. But 15-minute down close candles right here, so could see some downside, but I will not take anything for today. It was a pretty good session. We talked about a lot of stuff, you know, psychology, the accounts, you know, my perception on backtesting, a lot of stuff that I usually always talk about in my Discord, but we talked about them today. So yeah, I appreciate you guys for showing up to the streams. I will definitely do more giveaways in the future. Just getting started with the YouTube live. We will most likely have 2 live sessions and, you know, 1 Sunday recap / backtesting session with y'all. Especially will be good for the series on YouTube if we just document every single backtesting session we do together to build up that, you know, the profitable model that will be for our community. All right, that's a really, really good thing to do in my opinion. That would bring so much value to the people who just cannot really afford any, you know, paid groups or are from countries that the currency is pretty weak. So yeah, thank you guys so much, and I'll wrap it up right here. I will be live tomorrow at the same time, 12:30 p.m. EST. So I see you guys there, and thank you guys for showing up.